All right, welcome to another episode of JYR Trades. I am your host, Jesse. As always, guys, it is a pleasure to have you here. Join me on my journey. Okay, I gotta tell you, today was one of those days where I felt that I literally transcended to another layer of trading. Okay, as you guys know, trading is complex, it's not easy, but it's one of those things that if you really stick your mind to it, eventually things will start to line up. And this is what I'm here to tell you, that today was one of those days where I felt things started to kind of come together a little bit more. All right, with that said, guys, before I get started, okay, remember that everything that I share on this channel is for educational purposes. Nothing is financial advice, but I will say this: if you want to learn how to trade like the institutions, you want to learn how to trade market structure, auction theory, equilibriums, liquidity, then this is the right place to be. As always, guys, if you want to join me on my journey, please hit that subscribe button, like, share, and comment. All right, guys, with that said, let's go ahead and get started, guys. As always, I'm going to give you guys a quick description of the video before I get started. Alright, today's session, guys, taught me something different. Alright, this wasn't a divergence day. Alright, in case you don't know what divergence day, that means that price may be going in one direction, but value is going up in the real direction. This was a transition day. Price and VWAP were aligned early, confirming downside pressure, and the short made sense. But what mattered wasn't the move down, it was what happened after. The market began to slow down, stabilize, and build a base. VWAP flattened, and then the shift began. In this breakdown, I go over why the early short was valid, how VWAP confirmed the initial move, what clues showed the move was exhausting, and how the market transitioned from downside pressure into the upside expansion, and how to recognize when the real move hasn't started yet. This wasn't a lesson in timing, patience. Well, this was actually a lesson in timing and patience, and understanding the market, guys, has this thing called phases. Not a phase, but a phase from one area to another. And this is what I want to cover because, like I said, today wasn't just a trade. All right, it was a lesson in understanding when a move is real, all right, and when it's just beginning. And I saw it all today. Okay. Alright, so let's go ahead and get started. Alright, so the first thing I'm going to ask myself, alright, is this is New York about to open. This is 7:29 p.m. my time. Alright, and the big question is, where is price relative to New York value? So I'm going to show you guys here. These two white lines right here represent the previous day New York value. Okay. Now, if you're wondering how I get these two lines, it's really simple. When I go back to the previous New York session, okay, I go ahead and basically just use my fixed range volume profile tool. Okay, you can find it right here in your tool sections. All right, and it is called the fixed range volume profile. Okay, it's one of these here. There we go. This one right here. Okay, it's one of my favorites. And what I do, guys, is I simply measure from, the beginning and the end of that, and that's going to give me, as you can see right here, I have it on the yellow line right here. I don't know if you can barely see it, right here too. And then we got this red line. So we got New York Valley area high, New York Valley area low, and then we got our point of control. Those are the three strongest points that New York will show you. Okay. So let me remove this here. Let me go back over here. All right, so you'll see that New York. So we'll see that the price, guys, first of all, is outside of value, north of it. So that right there is telling us, first of all, that we're not looking into a rotation for the day. We're looking more for either a repair, perhaps back into value, or a continuation or expansion to the upside. Okay, now this is the part where, as traders, we have to learn what the market is giving us and learn to show its hand, right? Learn to wait to show it its hand. So that's one of the clues. Now the other clues that I have here is, where are my POCs? We know that New York has a POC here, point of control. All right, but there's always a strong one. Okay, now we have another POC right here and another POC right there. Those POCs are telling us that we are looking to go long. Why? Because below those POCs we see one mid right here. Okay, we have our London mid. All right, and we have actually our Asia mid. So right off the bat, guys, we're looking for a long. We have a long bias, but remember, just because the market is telling us that we are going to go long on our bias, it doesn't mean we automatically jump into a long. All right, the market didn't go along right away. So let's look at what happened, guys. All right, so the first things I want you to notice here is we had a post migration here. All right, and when we have the post migration, you see two things. You see, I have two programs right here. I'm gonna make this screen a little bigger here. All right, there we go. All right, so right here we have, this is my Remitar program. This cloud section is kind of like the no trade zone. It's a danger zone. All right, and you'll notice when the migration happened, this line right here, this post zero migration here, one thing you'll notice that even though we are in a long bias, you'll notice that it actually migrated under the cloud, right? So what that's telling me here is two things, guys, is that right off the bat we may not go into a straight long. In fact, when I saw this happen and I saw that it was beginning to come to the downside, this is my thought. I have my mids here, I have POCs here, mids here. That is telling me that this is right here stacked liquidity. Okay, and think of them like almost like barriers. Okay, so right here, once price started to move to the downside and I saw some rejection, all right, some rejection from migration zero. Okay, what did I do, guys? I targeted a downside, and I'm going to be honest with you guys, I actually targeted right here. After this third rejection, I targeted the downside, and I got a little nervous because it gave me a little bit of drawdown. But as you can see, okay, as you can see, my EMAs were lining up for Remitar 2.1. okay, and so I initially, guys, targeted the 1.5. all right, I targeted this here. This was about a 77-point move from here to my target. Okay, now I am going to activate Remitar version 2 here, and you're going to see the larger lines here. All right, now Remitar 2.0, guys, works for me as a way to determine, to see when price has actually exhausted at the bottom or at the end of it, the end of the move. And I noticed that two things right here. All right, price, first of all, when stayed under the Remitar 2.0, came back in, and remember, when it comes back in the first time, that's not the real move. Okay, went all the way back to zero, which was a significant good move there. Okay, but once it came back down, guys, and it tagged and rejected several times here, and once I saw that we were above this other red line from Remitar 2.1, then I knew at that point this was the move. And this was the move of the day, guys, because one thing I want you to notice is this, is that price goes from where we, remember the balance, remember that we hit the 1.5 actually above, actually right above it, right below it, excuse me, at negative 175. So in reality, guys, when this move started from here, okay, the target would have been the 1.75, or at least the 1.5, or even the the 1. But when you measure it from here and you target the 1.5, guys, that's 165 points. If you target the 1.75, over 180 points. That's a monster move. That's the move of the day. That's the move of the day. Okay. And again, guys, here you can see the candles got smaller, and booyah, it just started moving. Okay. And I gotta tell you, this is where a lot of traders probably got trapped, thinking that it was probably gonna actually, have a pullback, continue, and then it was gonna move down more. Now, right here, Remitar was telling me this is the end of the exhaustion. Once I saw price come back into the red, get rejected here, this was a move. At this point, guys, I didn't take another trade because of the simple fact I had already taken a 77-point move from here to here, so I was done for the day. I'm trying to discipline myself into taking just one trade and be done. The market can be tricky, and we don't want to give our profits back into it. Guys, this wasn't continuation anymore. This was a transition. Okay, I need you guys to understand that. All right. The base here was forming right here. Exhaustion was happening, and the shift in control, it went from shorts to longs, from sellers to buyers. Okay, after the base, that's really when the real move, like I said, what began to the upside, and it actually ended up reaching all the way to the 2, as you can see. Okay, if you're wondering how I get my fibs, okay, and I didn't touch on this earlier, okay, one of the things that I do, guys, is I measure, for example, the top. Doesn't matter which one it is, between London and high and the lowest. And when I measure that, what I do is I say, okay, this is about 143 points. And so what do? Well, 143 points. Where's my calculator here? All right, 143 points. We divide that by 2. That gives us 71.5 points, right? So what I do is I say, okay, well, what is 71.5 points? Okay, so I'll look here. I'll be like, okay, so 71. Okay, there we go. So I started measuring from the top of that range there. It's at 26,415 on my price there. So I'll get a remember the price that I said, 26,415, and I'll get the fibs from the same location. All right, and what I'll do is I'll just simply measure from that top, 26,415. Let's go look for it. There we go. There we go. So kind of around there, and you'll notice. Hold on, buddy. And you'll notice that it matches with what I have here. Okay, maybe a little bit off here because I didn't measure it exactly, but there it is. That's how I measure. And initially I put the fib, guys, where New York opens, all right? But once migration happens, I actually move it there because that's the real move in play. Okay, and so just wanted to cover that with you guys. Alright, guys, so the big lesson for today, guys, is really simple. The first move is not always the move. This was a big move. Alright, this definitely was a big move. 77 plus points for me. Alright, right here. Probably went a little further out. It's not always going to be the main move. But if you can learn, guys, to learn to read the shift the way I saw it today, that's where everything is going to change for you all. Literally. I mean, I can't believe that I'm sitting here with you and telling you guys that I saw the move happening, because I need you remember we had a bias for a long. It wasn't wrong. The market, all this was liquidity. Yesterday we had a different type of move. Okay, yesterday was one of those days, and I'm sorry I'm going off topic here. Yesterday was one of those days where we had a bias for a long, and I literally started taking a trade somewhere around here. Okay, somewhere around here, thinking long, and I had my stop loss around here, and it took me out. I mean, but yesterday we had a liquidity where it just came and grabbed it in 1 or 2 candles. It was done, and then it started coming back up. And when I saw that, I hit that stop loss. It hit me, but when I saw that my structure was still valid, I was like, wait a minute, this trade is still valid. I went right in, guys. Once I reached the 12 around here, I went back in, and you know what, guys? I targeted the 2 yesterday. You know, yesterday again, bias for a long, but what was different about yesterday, guys, and I'm sorry going off topic here, is that yesterday you'll notice that migration happened inside the cloud. So when migration happens inside the cloud, that's telling me that it's gonna come and grab liquidity. All right, that I have to let it come back into the cloud, get out, and that's when the move begins. Okay, or the entry begins, I should say. All right. Today's, oh my bad here. Today was definitely different. Okay. Today was definitely different because first of all, migration happened under the cloud. You'll notice migration went up. Okay. And when I saw that it wasn't above the cloud on the other side, I'm like, wait a minute. It's not ready. It is not ready to go to the top side yet. And it revealed its hand. All these were liquidity taken out, orders taken out. Okay. Buyers getting ready to go longs. And it took them out. It cleaned house a little bit here, going back and forth. And then it finally revealed its hand. It exhausted here. So today, guys, wasn't, it was a delayed expansion. Okay, it was a delayed expansion today. All right, it was a attempt repair. It was a failed attempt repair because it did try to repair. It did not repair all the way down here. Okay, and to be honest with you, I didn't target the -2 because I didn't feel comfortable with it, and I'm glad I listened to my intuition. And what did it do? It just went to about the -1.70 or so. All right. So again, today, how would I classify the day, guys? It was a failed attempt repaired with a delayed expansion. Alright, guys, this covers today. Hopefully you enjoyed the day. Hopefully you enjoyed the lesson, I should say. As always, guys, if you want to continue to learn this, join me on my journey. Hit that subscribe button, and we'll see you on the next one.